Hello? Hello? Is anybody there? Hello? All right, everybody, welcome back to Matt Money, here to just chit chat for you guys. It's going to be an exciting week, a real exciting week. We have the FOMC coming in for the September meeting this Tuesday and Wednesday. They'll be probably talking about on Wednesday what amount they are cutting the interest rates. Currently, we're sitting at between 5 and 5.25%, and what impact that has on the U.S. economy. We've obviously seen a lot of things slow down over the past 18 months. We've been preemptively waiting for these cuts since the basically end of 2023. So here we are. 9 months later. They were supposed to happen in March. They were supposed to happen in May. They were supposed to happen in June. They were supposed to happen in July. And here we are in September. And it feels very much like we are actually going to have some rate cuts. So here to just chit chat with you guys a little bit about potentially what opportunities are out there in the market to buy, top stocks to buy. It's a different environment, right? Some people have been chasing yield. Some people have changed into talking about preferred equities like Mr. Patel. Some people are not changing their strategy at all, and who's to say what is exactly right or wrong when it comes to what's going on right now. But we're here to just chit chat, toss some ideas back and forth. I don't really have a set agenda for you guys, just hang out and hopefully hang out. And for those of you guys that are watching this for the first time, thank you first and foremost. And second, if you're not subscribed to the channel and you've watched it once or twice before, but yet, you're still here, please take this opportunity to subscribe. For those of you guys that have shown the love, we've got 200 subscribers over the past week or so. That's the most I've had in quite some time. The channel's been around since 2017, 2018, probably longer than that, where I've been doing things more on a frequent basis. But I just want to apologize straight up to you guys. I feel like I do a lot of streams for free on other channels, and unfortunately I've neglected a lot of you, and unfortunately that shows up. Subscribership goes down. There's some days I lose subscribers. There's some days where I make very little income from YouTube. Granted, I don't make much. It's $100 maybe on average per month, but that's on me. I think I had a really good thing going. There's months where I've made or gotten 700 subscribers in a single month. And the fact that I've been able to rejuvenate that over the past 2 weeks by going live more frequently, uploading more videos, having a little bit more fun with YouTube, and getting 200 subscribers in the last couple of weeks has been a lot of fun. So kickstarting that, hope the trend continues. And if everybody could do me a quick favor, because if I look at my analytics, actually, let's look at it live here. If I look at my analytics on the Matt Money channel, for those of you that are subscribed, only 12% of you have all notifications on for the channel. That is low. Typically, it's between 10 to 30%. So in order to enable that, there's a little subscribe button down. And remember, subscribing's free. Hit that little bell notification. You get an instantaneous message whenever I show up. For those of you guys that showed up, luckily, just because you're searching, another stream might have ended, or the fact that you basically just happen to see that this come across on X, take the opportunity, subscribe. We talk about a lot of good things. The thing that I definitely want to acknowledge going forward is the amount of international people that we have following us on the channel. And it's absolutely phenomenal. Like the last 28 days, I'm just going to read out some stuff and just thank all of you. Last 28 days for everything that I've done on the channel, videos, live, etc. 62% have come from the United States, which is astonishing because that means 38% of you are international. The second most country that watches is Canada. Third is the United Kingdom. Fourth is New Zealand. And then last is Germany with just under 1%. And then if I click see more, it starts bringing up a whole bunch of different stuff that makes it troublesome for me to read. Actually, no, I can. Australia is a little bit behind Germany. Then you have the Netherlands, Sweden. So overall, man, just really appreciate you guys. Like that's kind of cool that I'm able to come on here and broadcast literally anywhere from the United States to Canada to New Zealand to Germany, which I speak a little German. I speak a little German. I took German, took 4 to 5 years of German. So, wie geht es Ihnen? A little formal. How are you doing in German? And all the way to New Zealand and Australia, man. That's just like super mind blowing. So, and I shout out the Rocket Lab guys for that. That's probably due to the fact that I do a lot of Rocket Lab videos on the channel. But we're entering a new realm, right? I mean, let's just pull up the S&P 500 really quickly. And what that has demonstrated for us over the past 5 years. So let me move this over to my forward screen. Now let's share screen overall. So what we've observed is zero interest rate policy going in from 2020 due to the pandemic. Obviously, we had the dip here in March of 2020. Zero interest rate policy, a lot of pumping of capital funds into the markets. And then once we got into 2022, the talk of interest rate rises really started. And that's when we saw this 25% or so drop. So we went from 475 all the way down to 362. Now, I'm not good with math. So let's do 362 divided by 475 minus 1. So what you can see, which you can't, but I can, is a 24% drop. Now, granted, this is on a daily sort of number, right? So I'm sure at some points we reached 30% or 25 to 30% down on any given, say, day over that time period in October of 2022. That's pretty crazy. Like, you don't get a lot of opportunities to buy in during that time period. So for the folks that were adding, I know I was adding pretty aggressively in 2022. And then more recently, this is when Chris and I really started the public portfolio. It was October 2023 to now. That was still only at 410 to 562. I mean, we've had a tremendous run since that October timeframe. But really, it was rising interest rate environment, flat interest rate environment at the 4.5 to 5.5% range. And then really the talk of when we were going to start cutting interest rates started happening in October of 2023. And I think that that's when people started to recognize things are getting a little heated, it doesn't necessarily make sense. I mean, throughout this entire time, we saw crazy interest rates, inflation numbers coming out. And part of that, I think, is what exacerbated the speed at which we were increasing interest rates over time to be able to, slow down the economy. Obviously, a fast-growing economy can cause inflation, and you need to basically put a stopper to that. So that's why we had such an aggressive 0 to 5%. And we're not used to it, right? Like 5% actually historically is not a lot in terms of federal funds rate, but obviously for recent times, basically since 2008 time, that's pretty crazy. Like, actually, maybe I should just pull that up. Like federal funds rate over time. The Fed funds. Yeah. So here we go. Share this tab. And then let me move this over here. So let me just double check that I'm sharing the right screen. I am. Okay. So, and this is why bonds have been so effective, right? And I'm actually going to talk about bonds here in a second. So back during like the oil crisis and back in like the late 70s, early 80s, you had interest rates anywhere between 11 to 20%, right? And so your family members or your parents, whomever is watching this might have talked about, in my day, interest rates were, and they weren't lying, right? I think my parents bought a house. They got it for 12 or 15% owner financing. So like, I think they bought it in like 82 or something like that. So instead of getting 15%, I think they got it for like 12 or something percent owner financing. So the owner made out like a bandit. Like, shit, if I could get back in the day and I could lock in 13% interest rates on my portfolio, I wouldn't even be invested in stocks. Love you guys. would hate to, not have anything to report about, but I'd just be sitting there being like 13%. We're good. We're collected, right? I would love that. I mean, that would be 6 figures a year just to hang out. And then maybe I would do YouTube or write articles or something on the side to get a little bit of extra income, but it just wouldn't make sense for me to risk the equity part of the portfolio. Some years you can be up, 40 something percent. Like some of my accounts are up 30% this year, thankfully, mostly for Palantir. And then some are up 40%. Like the Cashflow Chronicles portfolio is close to 50% up on the year, the public portfolio. So if you guys don't really follow that, actually, I don't know if I put that in the description. Let me double check. For those of you guys that follow us pretty religiously, thank you. Cashflow Chronicles thanks you. We're really trying to keep that going. But let me just double check. I did not add any of these to the description. So right now I'm adding to the description of this video Cashflow Chronicles, which is a streaming channel that I co-own with Chris Patel, my Twitter, obviously, and then I do have some Seeking Alpha articles in the description sometimes. Today, I'm too lazy to go get the other ones, but it seems like this one is Seeking Alpha for Rocket Lab. But for those of you who haven't followed Cashflow Chronicles, we talk about this quite a bit. We talk about interest rate cuts, etc. But anyway, what you probably have heard, and this is why this is so interesting, what you've probably heard over the past 40, 50 years, maybe, but really people that have studied the markets, they say you should have a portfolio. Some people might say a 60-40 portfolio. Some people might be referring to the fact that you need to invest in bonds percentages, the amount of your age. So I'm 30 something. So I would put 30 something percent of my portfolio in bonds. And it just doesn't work like that anymore. And let me talk a little bit about why, right? So since the 80s, when a lot of these statistics and papers and everything were written, you've been coming down in interest rates. Like you could put a line basically from the top of this at 18, 19% from the 80s to here, which is 0 in 2008. And this is like one of the very few times that we've had zero interest rate policy in the recent future, right? So you could draw a straight line from there. So what does that mean? So what you could do back in the day, back in 80, 81, you'd be able to put, let's say $100 into a treasury bill and get $19 back a year. Now, why is that important? It's important because you don't really have to do anything and you're still getting 19% per annum. And what the hell? So the next year, let's just say, or 2 years after that, you're only at 8%. So what does that mean? Well, you were getting 17, 18%. Now you're only getting 8%. The value of that bond, the face value of this bond that was trading at 19%, now that you got new ones coming out at 8.5%, 9%. The face value of the bonds that were trading back here at 19% have doubled in value because basically the going rate is 8%. So people are going to bid up till it's not really worth it anymore, these 19% bonds. Now, that's, of course, if you can only sell them on the secondary market and things of the like, which is a little bit difficult for the average retail investor. But some people have the ability to do that on Fidelity, Schwab, etc. You can buy these bonds, or corporate bonds for that matter, and hold them. And if interest rates go down, you can sell face value these bonds that you bought in 81 for 19% coupon rate for an approximate 8% coupon rate, 9% coupon rate. So that doubles the value of this bond. To be able to, because you're doubling the value of this bond at 19%, you're basically getting the effective yield of that bond down to 8-9%. So you were able to basically take advantage of that. So bonds not only got you that yield of 8%, 7% here, 3% in 1992, 5% in 1997, but you were able to basically buy this bond, and because the next year, generally speaking, it was going down closer and closer to zero, you'd also get appreciation on the face value of those bonds. And so that's why people would always say, ooh, the 60-40 portfolio, it's not that bad. Because you always had this kind of thing that was always yielding some capital, back to you. And then you also had this face value as bonds kept, or interest rates kept going down and to the right, as we've seen since 80 to 2008, basically. You always had appreciation of those bonds. So even though the market, as you see in these grays, were recessionary periods, you were still going down and to the right. So you always had a safe haven. What's different now is we've started at zero. Since 2008, we're starting at zero. And really, it's these points where you only have these small drop-off points. So like in 2019, when we started raising interest rates again, when we felt comfortable at the great financial crisis to start actually releasing some of the assets underneath the Fed and cut interest rates, we started having problems in the repo market, so we cut them slightly. And then obviously we had the pandemic, so we cut them back to zero. But had you been able to buy bonds at this point and then sell them on the secondary market, you would have made some money. I think there's an opportunity here to do the same. Now, this is something that you need to be wary of, right? Just like investing in TLT over the past 4 or 5 years has been pretty rough because you're in this high interest rate environment. Now, maybe let's just do like a quick TLT sort of look. Do I have, yeah, TLT. Share this tab. So you can see TLT is already back over 100, and just over the past 3 months, it's run 8 or so percent because everyone's kind of getting ready. It's flat. The reason why it's flat, everyone was anticipating that you'd have cuts. There hasn't been cuts. Then everyone's just kind of sitting around waiting. Now you're actually starting to anticipate and get these cuts, obviously starting this week. Everyone's getting fired up. So what happened over the past 5 years? Well, back basically when you entered this zero interest rate policy, you started raising here. You basically had November 2019, you start a cut. Back in like mid-October of 2018 into 2019, you started having a cut. You see TLT increase from about 110, 113 to the 140 range. Then you had zero interest rate come in because of the pandemic starting. Boom, 163, 170. And then what have we done? We've raised interest rates since this 2021 time period. And what has TLT done? It's gone down, 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 down. Let me just double check that I'm sharing with you guys. All right. Gone down, 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 down. Well, what's happened since then? Well, we've been sitting at 5.5% federal funds rate for, I don't know. I'm not good with math. You guys are better at math than I am. But let's just say about a year, year and a half, 18 months, been at this 5%, just hanging out. So we've hung out in the $80 to $90 range for TLT. I think however aggressively we are decreasing rates over the next year and a half, this TLT will actually do extremely well. And so there's an opportunity there to get involved. You can see we basically, since April, it's been more known that we're going to cut interest rates towards the second half of the year. So you started to see this rise because people are anticipating that this cut is going to happen. This is past 5 years. But what you're going to see is this. I anticipate this is going to go back to $120 to $130 a share. So in the meantime, you can kind of collect it. I think it's a monthly dividend. But why is this important? So why is this important? So there's a lot of these assets that are historically bought, right? The 1.875, the 2%. But you have some of these 4.75 yielders, 4%, 3%, 4.25, 3. And so if you look at what the actual 20-year treasury is selling for on the open market, CNBC, it's currently trading at, what is it, 4%? So this was trading at 4.25, 4.75, 4.125. So what does that mean? So we go to here. It got all the way up to 5%. Actually, it was almost at 5.5% back almost last year in October timeframe. So just about a year ago. But just now, we're trading at 4%. So where were we before we started raising interest rates? We were closer to 2%. in 2021 before we started raising interest rates. So to me, I think that this is an easy sort of delta, like I'm not saying we're going back to 2% because this is zero interest rate, right? So that's a little bit tough, but I could easily see us going to 3 to 3.5. So this is where TLT was like right before 2022, mid 2022. So where was TLT back then? Then we can kind of come back to TLT. We can see 5-year. Yeah, like around this time, you were at like 115 to 120 before you started really starting to have these aggressive interest rate cuts. So you'd be anywhere between this 120 and 140 is where I'm predicting we're probably going to go. 140 is probably aggressive because I think here you're still at zero interest rate. So I'm going to say you're probably going to end up between 120 and 130. But that will be a play, a safe play, I'd say, and you collect a little bit of a yield between now and then. But that yield is going to change. And that's part of the reason why this whole TLT trade is interesting, because this yield is going to go down. So what does that mean? The face value of these, 4.125, 4.75, is going to increase. Because, so basically, if you hold this bond and you can sell it on the secondary market, hold it. Because in a year's time, you'll be able to sell this bond for way more than it's worth right now. Because the open market's selling at 4% right now. So technically the value of this has to increase for the yield of this bond, the face value yield of this bond, to actually be 4%. So anyway, it just changes the dynamic of what we've been dealing with over the past several years. And so it just is a different way to think about things that most people probably aren't thinking about. So anyway, I think there's a good opportunity to invest in a lot of great things. Like SoFi, I think is going to do really well. Companies that are small to medium caps that unfortunately don't have enough capital and cash flow coming through the door, and they've been able to, or had to, because of the pandemic or because of the fact that they were cash strapped, had to go out to the debt markets and get unfavorable rates. I'm thinking REITs are going to do well because now you're going to have a little bit more ability to not necessarily dilute as much because your weighted average cost of capital is going to go down. So you've already seen things like Stag Industrial. That's maybe one to look at, which I'm actually invested in, and I have $40 covered calls for October. So unfortunately, it's had a pop up overnight. Unfortunately for me, but this one's been doing rather well since the beginning of the year. Since they've started to acknowledge that interest rates were going to get cut. But you see it peaked out here before interest rates got risen at $48 per share, and it pays a monthly dividend. So I think there's twofold here. Is it really only yielding 3.6%? I feel like it's got to be yielding more than that. But it yields a decent percent on a monthly basis. I've been holding this one for a decent amount of time, reinvesting those dividends. I think I even bought more maybe before 2020. I know I only had 100 shares for a long time. I've held on to this one since 2015. But this is going to be one of those ones where if it gets to the mid 40s or even maybe now, it could be an appropriate time to kind of take it off of the list, unfortunately. I think another one that's going to do extremely well because of how much debt it has, and it's already done extremely well. I talked about buying this one, about in the $50, $55 range. So it had a really bad first half of the year. About 18 months ago, it dropped from like the 90s down all the way to like the 50s. I bought way too early. I think I started buying in the mid 60s, and then I bought again, in the 50s or so. I actually had some shares of this called away, unfortunately, but I think this one will continue to do well as interest rates get cut. Why? Why is it going to do well? There's a lot of debt that this company has taken on to be able to expand their renewable portfolio. And so I'm actually not that upset that it got called away because I think it's actually getting back to a decent valuation. It's not screaming buy anymore like it was at $60. So this one, I think if you're looking for a dividend, I still think there's a little bit of meat on the bone here. It's not going to be super simple, but I mean, this one, it kind of trades a little rich. So my fear is that, there is that piece, but I think you'll see if they are able to refinance a lot of those debts that they have, they're going to be able to increase their net income as well. So there's some benefit associated with that. I mean, I don't need to talk about this one too much. This one's already been a barn burner. This was not my idea. This one was a Chris Patel, Stephen Fiorillo. For anybody that got involved the same time I did, I bought, I forget how many shares. It was 400 shares or something like that, 300 something shares. I forget. But our cost basis was around $23 or so. I still have about 200 shares, if I remember correctly. So I'm up about 200% on those because I bought in the 23 range. But here we are over the past 3 years. We're doing well. We're up 55% year to date on this one too, 72% over the last year, and we're still collecting a good dividend. What's it at? 4.5%, 5%. So you can't complain on this one. I'm gonna sell this one though. I think when it gets to 75 or $80, this is one I'm selling. But right now, I think this is an easy one to kind of pull some extra meat off the bone. I mean, it's already run a good bit, but interest rates are getting cut, man. Like, what else do you expect? Like, this is one of those ones that it's prime time real estate in Manhattan, New York. This one's pretty easy to follow. But I think another one that people actually one, I want to shout out Stephen Fiorillo because he's been investing in this one, and this one actually was an investment that I had a long time ago, back in 2014 timeframe. 2014, I invested in this starting in like the $38-$40 range, and I took it all the way up to like $70. I think I eventually sold it at $50 in like this 2018 timeframe. But I had a few hundred shares, and it was a big investment for me back in the day. But I was just like, you know what, man? Like, I just saw the investments they were making, and actually might have been after the pandemic that I sold it. Actually, I'd have to go back and double check, but it was somewhere in this range, and I think I sold it for $50. Because I know it and Wells Fargo I sold for $50. So unfortunately, and I did make money because I did always reinvest my dividends, but not nearly as much as I would have, obviously, if I had sold at this peak here. But this has been on a tear, man. And a lot of this is because of how extreme this dividend yield is. Like, it's 7.4%. So people were picking up, meaning Steven was picking this up at the $40 range. And obviously it's jumped up, right? Like 25% or so over the past year, because people are anticipating that yields are going to go down. So they're going for safe havens. They're going for things that are yielding really well that they know aren't going to cut the dividend. Because this is a safe haven. I mean, as much as people might, they're able to raise rates, raise their costs, raise their goods prices faster or just as fast as their declining growth is. So I think they decline a couple percent every year in terms of smokers that are out there. There's still some regions that are increasing in smoking. But there's that. I'm curious to see how Philip Morris is doing. Obviously, Altria Group and Philip Morris used to be connected. $1.25. I sold this. I had Philip Morris as well back in like 2021, 2022, when it was like $100-something, and I put it into TQQQ, and obviously that's pretty good because I think I bought TQQQ at like $45 or $50. I'm trying to remember. I think it might have been pre-rate cuts. I want to say it was around this 2021 timeframe that I'd bought in. So I've seen it all the way at the peaks, all the way down to the bottoms, and now back up into where we're at now. But anyway, let's kick it over to you guys. You guys are the most enticing part of this stream, so I can keep rambling on and rambling on. But what I will say is, for those of you that are also looking for homes, it could be a good opportunity to potentially take some profit here and look for some homes. For those of you that haven't been paying attention, Wells Fargo actually is at a 30-year mortgage, 5.5%, which isn't great, but it's not the 8% that we were dealing with just a short 6-7 months ago. One of my most recent properties we bought at 7.75. Granted, that was a rental, and so we had a price like that, but that was probably mid sevens, low 7% interest rate. So you're 2% off of that, and that saves a drastic amount of money. Drastic amount. So for those of you guys that are looking, keep your eyes peeled, because at the end of this week, I'm very much curious to see what ends up happening. I'm anticipating that you're going to see, at best, unless we have a zero interest rate policy or something like that again come into play, I'm anticipating the best you're going to see is probably 4%, 4.25%. And that probably won't be until the end of 2025, early 2026 at the earliest. The next 3 rate cuts are going to be very easy. There's a 50-50 split. I was watching Sam's stream, Hidden Edge podcast. I was watching his stream earlier, and I saw a few others pull it up. It's split hairs right now between if it's going to be 25 basis points or 50. But what I can feel like, based off the data and where I think the Fed is heading, is there's going to be 3 rate cuts that happen, but whether or not we end up at a 75 basis point cut or 100 basis point cut before the end of the year is, I guess, up in the air. I don't think 125. I could see 125. I just don't see 250 basis point cuts in the next 3 meetings. I just think it's kind of a lot. So I could see 150 basis point cut and 225s. That would get us to 100. But I've been wrong before, man. The whole timing and speed at which I thought we were going to go to the federal funds rate and increases, I was off by. I thought at most we would go to 3%, hang out, see what it did. But we went straight to 5%. So, I thought we were going to increase, I think the first year, I forget when it was, 2021 or 2022. I think it was from late 2021 to 2022. I was thinking that we would increase rates by about 1% or 1.5%. And we blew past that. So I'm very bad about forecasting in that respect, but I feel like I have a little bit more knowledge as what the federal funds rate are doing now. The thing that I'm concerned about is I have a very good feeling based off the data where I've heard the rhetoric kind of be that we'll end up at 75, 100 basis points by the end of the year. The thing that I'm still iffy about and I don't know how to play is 2025, because there's not going to be 10 cuts, right? That's 2.5 percentage points, 250 basis points. So I just don't think that we're going to end up at, 325 to 350 basis points at the end of 2025 off of where we're at right now. I don't think we're going to go to 2 to 2.5% federal funds rate by the end of 2025. I think that's pretty quick. I could be surprised. Oil could throw a wrench into there. Like I still am a firm believer that while oil is at $69 right now, I think that's short-lived. I think by the time oil futures, by the way, so for a little food for thought, for those of you guys that don't know much about how oil trades, it always trades the following month. So right now, even though we're in September, we're trading oil for October, October delivery. You have to think, you have to transport it from the platform to onshore to tanks, and then you have to deliver it starting a certain time period. So you can't just be like, oh, we're buying it today. There is the spot price, right? And you can buy it today. There's, I'm sure, people that are buying and selling spot prices on a daily basis. But generally speaking, the trades that are being made are T+1, so time +1. So right now it's October. Once you get to September 25th, you're going to start trading November oil. October and November oil are trading at, like, last I checked, 67 and $68. So it's trending down. December was trading at like $66. So very rarely do you see the real actually going out and down. Most of the time you see it going out and flat or going out and up. So the fact that you actually have futures for oil trading down means a lot of people are bearish on oil right now. And so if any negativity comes in, like further supplies or anything like I heard Pakistan found a bunch of oil. If that gets quantified and it's realistic, and they think that Pakistan is going to bring, 1 million or 1.5 million more barrels to market in the next 4 to 5 years or something like that, the market's going to not react well. The market's already, the supply is is just going through the roof at this point. Demand is there, right? I'm not saying that demand is waning. Like we have over 100 million barrels a day, which is over 5 billion gallons of oil. Well, I guess it's over 4 billion gallons of oil in use every day, which is pretty astonishing if you think about it in gallons rather than barrels. But 4 billion gallons of oil every single day is in use. But the problem is we have more than $4 billion of supply as well. We're cutting supply. So I just think it's tough. Interesting to hear. Who knows what the next few months is going to bring. I honestly think if you're looking for something to potentially invest in as well, keep an eye on oil prices. Keep your funds ready. If oil dips into the 50s, I'm probably going to start dollar cost averaging into some great companies. And it could dip. Like I did this the last time, right? When the pandemic happened, when oil started absolutely getting destroyed, I started buying Exxon when it was like, it hit, I forget what it was. It was like 80, $90 before the pandemic. It dropped into the 60s. I was like, your boy's buying. And I think I was buying Exxon all the way to like $38. And I forget how many shares I ended up with, but I know by July of 2022, I was out. It was a little early. I think I sold it like $88 or $89. Obviously, now it's trading at like 110. So I missed out on some of those upsides. But, and then, I held my Shell. My Shell, I was up over 100% and collected a fat dividend. Dude, the dividend from Shell was phenomenal. But in that respect, man, I cut my Shell position at 72, 72.50 or something like that. And right now it's trading at 67. So I saved about $5 a share. And I anticipate that it's probably going to hit 69. $59 a share before it gets back up to $75. So that's for sure. And anyway, so there's that. That's just kind of my thought process. I hope you guys are enjoying that. 99 of you in here. Thank you guys so much. Please, 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 please hit the subscribe button. Love the fact that 62% of you are from the US, 38% of you are from international markets. That you guys can't even imagine how happy that makes me. Man, it's a blast. I've had a blast over the last 2 weeks. 200 or plus of you that have subscribed. I just want to say thank you guys, especially if you're one of those people watching of the 200 that just subscribed over the last 2 weeks and you're like, man, this guy's live streams are great. You're encouraging me. You guys are inspiring me to continue to feed back into you guys because, man, I've been at 13,000 subscribers on the YouTube channel for like, I don't know, 24 months or something like that. I haven't put enough energy into you guys, and you guys are beautiful. You guys make me think so well. We're going to hit at the top of the live stream in these chats and go down and give some thank yous. Actually, I just realized my Robinhood made some investments. I think I bought some Bitcoin, some Ethereum Classic. And I think I have some Accelera and NEXT that's going to buy tomorrow. By the way, Chris and I were supposed to do a stream tonight. Chris had something come up. We're doing it tomorrow on Cashflow Chronicles. Be sure to check us out on Cashflow Chronicles. We're trying to get that bad boy up there. I told Chris, I didn't ask him, but I told him, I said, when we get to 100,000 is kind of our current point where we're trying to get Cashflow Chronicles public portfolio to. We're at 4,400. So we're about 20th of the way. When we get to 100,000, we're going to start sharing revenue with you guys. And it's happened quicker than we thought. I think we started doing Cashflow Chronicles in like July, August last year. So the fact that we were able to do it on my channel, do however many episodes, switch over to a separate channel, get that monetized, and now we're actually generating $100 a month in there. That's beautiful. So for those of you guys that follow us over there and listen to how Chris is Mr. Flippy Floppy, love that. Love the energy over there, and just really figured if Chris isn't going to go live with me tonight, I was prepared. So I got myself a Dutch Bros. I got myself fueled up for a little bit of energy, a little bit of caffeine to do a live stream. And Chris said, let's do tomorrow instead. So I'm all about that. I figured I would hang out with you guys anyway. Why would I give it up the opportunity if I already had it scheduled, So let's go to the top. Who's in here? So we got Ahad. What's going on? Midwest, my guy. We got Big Dick Ben, Midwest again. Matt going hard streaming lately. Yeah, man. Like I said, I'm pouring into you guys like you guys poured into me. Alvarado, what's going on, my guy? Let's move this over. Sorry. My guy Johnny, what's going on, my guy? Hope things are going well. I need the Cameo app. You, Amit, and all the junkie boys. What's the Cameo app? I don't even know. I feel like I've heard that before. Greener, what's going on? Just got done listening to my latest stream. Man, well, here you are. Got another one here for you. Mark Kiwi, never seen you before, my friend, so thank you for coming on. You are the 12%. There you go. I'm assuming from Canada. That's what you mean. Mike K, what's going on? Ramu, I feel like I've seen you on and off the channel. Good morning from Great Britain. I'm just going to be honest. I'll be in Great Britain next week. So I fly out the 21st. So I might or may not do a stream while I'm over there. Maybe. We'll see. But I'll be in the UK next week. It'll be fun. So Cashflow Chronicles might be tough to do unless I can meet Mr. Patel at a different time period. So maybe we'll still do the stream or a video, but it might be really different timing as we're used to. Still amazed by the ASTS jump. Still hard to understand why Rocket Lab underestimated with respect to their assets and capability. Post any Constellation Neutron, it'll really rock, in my honest opinion. I agree with you, man. I think there's a huge no man's land between where Rocket Lab is valued right now and where SpaceX is valued. SpaceX is king, right? Like, I'm not going to devalue that by any means. It's like trying to say Tesla doesn't make an electric car, right? Like, they do. And they're obviously king at making the electric car. But Rocket Lab's like GM and Ford. Like, they're coming. They have their capability. They're making sales. And I'm really curious, other than Neutron, I'm really curious over the next 12 months where HASTE gets to. Because I feel like HASTE is going to be another $100 to $200 million a year in revenue that would really help with respect to profitability in the short term. And I hope that HASTE itself grows into like a $500 million a year sort of thing. So we'll see. We'll see. New Zealand in the house. My guy Brad, what's going on, my guy? Always appreciate you. Nice to hear common sense, low hype laced with optimism and the necessary skepticism. Hey, man, I appreciate you. I try not to be like the hype guy. I'm not trying to, like, if you want hype, I'll show you Palantir stock and be like, oh my God, it's never going to go down. But that would just be lying to you. Like, I try to provide realism in the market, right? I don't know what's going to happen. These are my thoughts. It's going to go up. It's going to go down. It's going to go sideways. But at the end of the day, I'm going to invest in the S&P 500. I'm going to invest in these great companies that I think are going to do well. So I appreciate this statement a lot. Thank you. ETF FaceTime, my guy. Like and subscribe. Love that. Seeking Alpha. Thank you, my guy. Much appreciated. Yeah, I got like 7 or 8 articles on there. There's that. I felt Cashflow Chronicles tonight and caught Matt. Don't sound so excited. Come on, Junebug. Thought we were bros. No, yes, I did state that. So Chris and I did have something planned for 9 p.m. EST, 8 p.m. Central, and unfortunately, Hot Chris had to move it to tomorrow. So we'll have a great time tomorrow. Yes, thank you for this. Cashflow will be tomorrow. Please like and subscribe over there. It'll be a good time. How often do you do covered calls, cash secured puts? I have a large portfolio, been building for 5 years. Just started running this strategy, seeing great returns so far to bump income. First and foremost, congratulations. If you're saying it's a large portfolio, that obviously means a lot to you. And congratulations, because I know how hard it is to sculpt that. So congratulations. Covered calls, man, it's kind of like stocks, right? You can, options in general, take a 50,000 foot view. Options can be used for so many different things, right? Generally speaking, stocks, you can go up, down, sideways. You can short stocks. So there's like 4 or 5 different ways that you can utilize stocks. Options, there's literally, I don't want to say hundreds, but there's hundreds, right? To give you there's a different magnitude of different things that you can do with options than you can do with just stocks or equities. So you can do covered calls, which is more income based, but it could be a hedging technique. You could also do puts, whether that's cash secured puts or whether that's puts to go down and try to hedge your bets, whatever you decide, or you just want to think that you're short the stock and you just want to see it go into flames and so you're buying puts. So there's a different multitude of ways for people that are interested in options, what you would do them for: insurance reasons, income reasons, hedging reasons, etc. Covered calls, cash secure puts is mostly an income strategy. So two different things. Covered calls means you own 100 shares. So there's that fine piece. You have a minimum of 100 shares. Options, you write contracts that represent 100 shares, right? So in order to do covered calls, not naked calls, I won't even talk about that on the channel. To do covered calls, you need 100 shares of an underlying stock, or 1,000 or 2,000, and you can multiply the contracts. As long as it's in the multiples of 100, you can write contracts on it. And what you're basically doing is giving somebody the opportunity to take your shares away from you at a certain price for a premium. So let's just say you have Palantir shares. Let's just pull up Palantir really quick. And you are thinking that Palantir is something that you want to hold on for the long term, or maybe you want to get rid of it, right? Let's just be blunt. There's so many different ways that you can view this. But let's just say you want to hold on to your shares, but you're like, man, I've made so much money over the past year, almost 100 some percent. I don't want to sell the stock because I don't know if I'm ever going to be able to buy back in, right? Like, will you actually be able to buy back in at the $28, $30 range? You hope, you think it's overvalued right now, but you honestly don't know, right? Like, it could be one of those cases where it just runs and runs and runs, and it really just never catches a breather. And by the time it pulls back, other news has come out that makes the floor of the stock $31, $32. And you never have the opportunity to buy back in at 28, 29 bucks. So you're sitting there being like, well, at least want to get something, right? I want to get a little bit of profit. I want to like hedge a little bit of my bets. And what you can do then is sell covered calls. So what covered calls are basically is you're giving somebody the opportunity. So you can write in the money. So you could say, yeah, I'll sell you this covered call for next Friday, September 20th at 35 bucks for $1.16. And that would mean that you're locking in $36.17 for a break even. If that makes sense to you, it's sitting at 36.25. Granted, it's up overnight. So by the time this opens tomorrow, this will probably jump. But you're basically saying, I'm willing to let it go. Generally speaking, with covered calls, I would say only write a covered call at a volume at which you'd actually let the company go. So for example, you could be sitting there, and I generally only write weeklies on Palantir because it moves very quickly, and it allows you, if it say does go above your cost basis, you have a little bit of flexibility. But say you're sitting there being like, man, I got 1,000 shares and I'm trying to get something, right? Like, I don't want to sell money, I don't want to hedge my bets or anything like that, but I do want to sell. I would probably look at something, and this is also the probability profit, right? There's a whole bunch of different things in here. There's a bunch of Greeks. Let me expand this. There's a bunch of Greeks in here. You're going to see delta, gamma. They're literally Greeks. They're Greek letters. Delta, gamma, theta, vega, rho. And all these are like either variations themselves or derivatives of something else. So it's pretty interesting in that respect. I look at delta as kind of the chance of profit. So it's kind of like if you were to take this 46 cents, your chance of profit, or it actually happening, is there. The chance of profit adds in this 46 cents here. This 37.50 is, if you look at the delta, is more of like where it sits in the standard deviation of potential price movements. So then you add in the 46 cents, and then it adds in the fact that it's not 37.50 that your delta is really the standard deviation of like that, but it's also taking into account that additional, 49 cents or 46 cents. So it expands out a little bit more. So your delta is always going to be higher than your probability of profit or your chance of profit. But that just gives you an idea, because like this shows you, 70% of the time you're probably going to be okay at 37.50, right? But there's always the opportunity that 30% of the time you will. But anyway, for those of you that are kind of paying attention, I look at it like it's my golden goose, right? Maybe you're sitting there like Stag Industrial. I'm okay if it gets called away at 40 bucks. I've covered calls at 40 bucks. That's okay. Palantir, I don't really want to sell it right now, So I might be looking at something far out of the money. Unfortunately, I got caught with my pants down. I'm chasing. I'm at like $33 for my covered calls. So I'm slowly raising that over time, and if it gets called away, it gets called away, right? At $33, that's fine. I'll do cash secured puts, hopefully get back in it or not. But my thought process is I'll be fine. I'll be able to roll out of it. But for those of you that are like, I don't want my shares to get called away, don't get greedy. Like, don't be chasing pennies and be a dollar foolish, because you have to think when you sell in your short term, you're gonna have to pay, income related capital gain, and not even capital gains. You have to pay short term capital gains tax, which is basically tax like your income. So if you're a high income earner, you're screwed. Versus if it's long term, which a lot of my stocks or shares are for Palantir, 4,000 of them are long term, 500 are shorter term, then you'll probably be okay. But you're still going to basically be like trying to chase $13 per contract, but you're going to end up paying a crap ton more in taxes, right? So keep that in mind. So you want to stay out of the fire. So if I were to rewrite these and I were naked, I would probably be writing somewhere in like the 40 range. And that, you might be like, man, $13, like that's not a lot. Remember, 13 cents multiplied by 100, $13. But when you have 4,000 contracts, or 40 contracts rather, you times it by 13, it's $500 a week. You do that a couple times a year, it ends up adding up a good amount of money. And then same thing on the opposite side, right? If you were to sell puts, meaning like you're basically saying, I'm going to take premium for somebody to give these shares to me if they get to this price or below, then, you could use this as a decent strategy to pick up shares at a pretty decent valuation. Or you could be like, you know what, I want to buy it, but I'm like kind of 50-50. Let's let the market decide. So let's just say you are buying into the fact that Palantir is going to be the next Microsoft. You think it's going to be $3 trillion in 10 years. And you're like, I need to buy it today. So you could say, I'm going to write the 36, $1.27. That means my break even's 34.67. Unless this closes below $36 by September 27th, generally speaking, nobody's going to put you these shares, or like basically give you these shares. But the fact that they're cash secured means you have $3,600 on the sidelines waiting to buy this stock. So what people might do is, for me, like if I were to do this, I would be looking at something, and this was before the price skyrocketed, right? I was looking at potentially writing on the $28, $27 range. Now, right now, it doesn't make sense, but what you could do is you could write it for a couple months out. Like, let's say between now and November 15th, you were looking at potentially buying stock and you had some money set aside. You could do it at $28 and capture 62 cents. And that's pretty far out of the money, right? But why would you want to buy it at $36, right? I mean, it just doesn't make sense. You think there's going to be a pullback, etc. So what does that mean? You're basically setting aside $2,800 for $62. So 62 divided by 28, that's 2%. So between now and then, you're going to get 2% between now and 2 months from now. So that's okay. You're sitting there, you have cash. You don't want to buy it unless you think it's the right price. There you go. Like, you're getting 2% on that, and then coupling that with the 5% money market fund. Hopefully, like if you're doing this in Fidelity, you're getting that 5% on whatever cash you're sitting on the sidelines. So there you go. Like you get 2%. You're sitting on it for 2 months. If you were to annualize that, times that 2%, 2.2% really, times 6, that's 13% return. And not only that, but you're not overpaying for the shares. Like if you get put the shares, your cost base is going to be $27 versus the $36 today. So it's not really a bad deal, right? And so it really just depends on how you want to do this strategy. Some people, they do it strictly for income. Like they don't care what the underlying stock price is. They do the wheeling strategy. Generally what the wheeling strategy is you aim for like the 30 delta positive for puts. And so you're always kind of just chasing the stock. $33 is for Palantir. You get $1.84 for these puts, which if you were to do that math, $1.84 divided by 33, that's 5%. So 5% over 2 months, it's 3% per month. If you were to get put the shares, then you would immediately turn around and try to write covered calls on it. And worst case scenario, let's just say it jumps to $40 tomorrow, you could probably close out these $33 puts for a fraction of the cost. And that's what I did with Rocket Lab recently. People were giving me crap. They're like, why are you writing cash secured puts at $6? And I was like, you know what the price is going to do. And what does Rocket Lab do over the past week? Well, it goes on a little bit of a run. And so I wrote some cash secured puts at like $6, $6.50, somewhere around here. And I think I wrote it for like 30 or 35 cents or something like that to basically buy, I forget what it was. It was either October or November, a crap ton of Rocket Lab because I still want to buy, another 4,000 or 5,000 shares. And so they're like, oh, that's stupid. Like the price was so much better yesterday. And I was like, you don't know what the price is going to be, man. You never know. And what ended up happening, I had a buyback so that if it went up 70% in profit, which it did, I only have one contract left because all the rest were bought back, but collected like a couple $100 in premiums. And so now I don't know what I'm going to do with that money, but maybe I'll put it in like, I don't know. I've been dabbling in the fact that I need to for some reason, get back into dividend investing for some reason. I don't know what it is. I don't know what itch it is. Part of me is just like, you know what? You're close to that second milestone that you were hoping to get. And now it's time to get a little bit of that monthly cash flow up, So anyway, I've been dabbling with that. Tell me what you guys think. Like, what do you guys think in the description, or in the chat box? Like, do you guys think I should get back into dividend investing? But anyway, let's hopefully that answered your question, Mr. Olivier. Yes, ask questions, guy on Twitch. You probably already left, but feel free to ask questions, man. Was waiting for Cash Flow Chronicles. My guy. Well, sorry to disappoint people. Rocket Lab 2-0. Halftime, yeah. Melanie, what's going on? Mercury, what's going on? I don't know anything about trading, but a friend of mine started trading. I guess that's the Australian dollar. And he said if this trade loses more than his trading account balance, his trading account gets terminated. Yeah, you can leverage like on currency trades. You can leverage a good bit. Why does that happen? And is stock trading the same? Yes and no. Like you can leverage, but generally speaking, I just wouldn't follow what he's doing unless he knows what he's doing. If he's kind of just getting involved. Currency trading is very scary, and you're basically looking at one economy versus the other, and it depends on interest rate cuts, and it depends on particular federal movements of their particular central bank versus our central bank, meaning the Australian bank versus the US bank, and how's the Australian economy doing? Iron ore prices are going to the shitter right now. Oil price, gas prices, all these things are going to the shitter right now. So a lot of that, Australia is very much on the natural resource front. So right now, Australia probably not doing too hot. If there's a rebound, though, like Australia kind of bottoms out, natural gas prices, natural resources starting to turn around, then it could be a good opportunity to go long Aussie and short the USD, But generally speaking, the Aussie has been doing worse and worse. But who's to say? But stock investing is very different than economy trading, like currency trading. Currency trading is very crazy because it's mostly based off of the economies of either country versus stock trading is one individual stock. You can have some companies that do really well, some companies that do really poorly. Like BHP, very familiar company for those in the Australian markets, has been kind of challenged right now because of a lot of the natural resources. The value of those commodities have been going down. So you sold your SLG to buy Amazon. I think that's a good idea, Ray. Also, welcome to the stream. Detra, what's going on? Thank you for the continued support. Can you please identify the stock instead of saying this one? It helps those who can listen. Yes, thank you. I try my best to get better at this because I know some people listen while they're at the gym. So I appreciate that. I'm trying my best to do better about that, but please remind me if I'm still continuing to do that. Hear about Galileo from SoFi. Do you know what it is and how it's implemented? That's not my business, I do have some SoFi. I have actually contemplated if my Stag Industrial and NVIDIA gets called away if I'm going to dabble more and maybe get to like 4,000 or 5,000 shares of SoFi. So anyway, Mike K, what's going on, my guy? Much appreciated. My guy SG, you can refi. You cannot. You're fucked. You got that good interest rate, my guy. You're fine. Savici, late night study sesh kicking off 50 minutes. Thanks for holding it down. No problem, my guy. No problem. What do you think about buying cash versus finance with rates? I'm not a fan of buying cash, man. Like, maybe. It really depends, right? So my particular version of real estate investing, I'm assuming you're talking about real estate investing, is I would love to have a bunch of properties, have a portfolio loan at about a 70% loan to value ratio, meaning I have 30% equity in the entirety of the portfolio. So if I have 10 properties, I own 30% of all those 10 properties. Some of them might be 20%, some of them might be 40%, like whatever. But if you have a portfolio loan, they basically allow you to do one mortgage payment. You collect all the income from all these different properties, and that's cool. Like I would love to get to that point. Right now, I just have 3 separate loans. One loan for the one investment property I bought in 22, one loan for this house, which I'm going to refinance and eventually move out of. Actually, it's a good thought. Maybe to talk about my boy SG over there and see if I can pay him some rent, move in. I don't know. I got to talk to him about it. Save some more money, buy another property that eventually I'd live in long term, right? That's like I'm looking for kind of like a forever home if I stay here in Houston. And then thirdly, the property I bought in May, all those have high interest rates that I would love to get down, but I don't know where I was going with this, but I always finance them. My thought process is I'm in a portfolio mode right now where I'm still trying to grow and I have a 9-to-5 job, so I don't really need the cash flow. There will be a time though, and I've been having this conversation with my sister. She's 8.5 years older than I am. And she's like, well, we're looking closer to retirement than you are. You know, they're starting to enter their 40s and late 40s. And so they're looking like, when can we get this cash so we can retire, right? And I'm looking at it more like I need to expand. I look at it as if I can get more properties at a decent loan to value ratio so that I can get leverage on the properties. So for every dollar, let's say you have let's just say, for example, it's 1/3, 2/3. 1/3 of it is your own equity, 2/3, 66% loan to value ratio is the bank's ownership. You're leveraging yourself 3-to-1. So if the property goes from 100,000 to 110,000, then, and you have a bunch of them, if you were to own it 100%, you only got a 10% return going from 100,000 to 110,000. But if you own 33% of it and you only had $33,000 in that deal and it goes up 10%, then you went up 30%, right? Like that's 3-to-1 leverage. So if you have $1 million, and if you think about it this way, you have let's just say $1 million, and you were to want to get a 25% down payment on a lot of these things. So 75% loan to value ratio, you'd get 4-to-1 leverage. So, or you can just buy one property, $1 million. So if that $1 million property goes to $1.1 million, then you got a 10% return. But if you had, let's just say, 4 properties that had a 10% return, $4 million properties, sorry, they got a 10% return, and you had $250,000 in each of them. So basically 75% loan to value ratio, then you'd get 400,000 return of your $1 million investment, 4-to-1 leverage, right? Because you have 100,000 for 4 homes. So that's the beauty of it, right? And when you have 400,000, you could potentially, take that 400,000, refinance, etc., allow you to buy yourself a 5th home, like if you were to figure it out that way. And it could be very well that it doesn't make sense to refinance all the homes, but maybe you refinance one, you get $100,000 out, refinance the house at, let's just say, the same, like 75% loan to value ratio. you're able to take out $75,000, buy a house for 300 grand. Next thing you know, you have a $300,000 property that goes to 330. You're just basically using that to continue. The fear of that is if you do it too much leverage, right? And that's why I think like a 70% loan to value is kind of the sweet spot, because if you keep doing it at 80%, banks can do some fishy stuff. Like, so the nice thing about a 70% is that you can, especially if it's a portfolio loan, you could be like, I'm taking out 5% of the portfolio equity. I'm buying another house. So if it's $1 million, you take out 5%. That's what, 50 grand. You're like, I'm taking out 50 grand. I'm going to go and invest this somewhere. So anyway, that's kind of a tangent, but it really just depends, man. Like if you want a cash flow, you don't want to really have to worry about it. Like for example, if we bought, I couldn't afford it, but if we were to have bought our one property cash, that'd have been $500,000 out of pocket. I don't think we would have been able to do it. But when I say I don't think, I definitely wouldn't have done it. But I mean, we'd be lucky to make, I don't know, 10 to 15% cash on cash. Well, I'm thinking about it in terms of how much we made. But if we owned a whole thing, shit, now you're just paying electric and stuff. Yeah, it probably would have been about the same. But the fact that you're getting almost the same amount of return, you're just paying an additional amount in mortgages and stuff like that. I don't know. It really just depends on what you're trying to do. Like for me right now, I'm just trying to grow the portfolio. So I'm okay with not getting all the income, right? I'm more about the appreciation over the long term, because I'm not really looking for now. I'm looking for 10 to 15 years down the road. But you might be looking for cash flow now. And so all the power to you, but I would still always say have mortgages on your properties, because it also allows you can write interest off on your income. So any interest that you pay, you can offset your income. So for example, I can write my personal mortgage. I can write now thousands of dollars I'm going to get in 2024 from my next rental property off on my mortgage, to the point where if I have a bunch of mortgages and a bunch of homes, then I can almost guarantee offsetting my entire income. And then I get a massive amount. So it's like you're almost investing in some of these houses, but you're almost getting a chunk of change back, like for free. So it's almost like a discount. So on your cash flow. So you might have to come out of pocket by, let's just say $3,000 a month, but at the end of the year, you get back $400 a month or whatever it is, depending on what kind of interest you're paying and where you are in your equity. So, or where you are in your amortization schedule. So it kind of pays to always keep your amortization schedules at 30 years, because you're always going to be paying a lot to interest. Now, some people might be like, well, that's stupid. Like, you want to pay it off. It's like, I get that. There's different parts of where you are, right? Like if you're 65 years old, probably you don't want to have a 70% loan to value ratio, unless you plan on having a big business, you hand over your kids, et cetera, like that. You probably want to shrink the amount of properties you have and get closer to, I don't know, like 30% loan to value ratio, maybe zero, right? Like you just want to have the houses completely paid off. Like it really is dependent. It's like the stock market. Like, do you want to invest in growth, or do you want to invest in dividend income, right? Like if you're retired, you're probably looking more towards income than growth, right? So it just really depends on where you're at. For me, it's pure growth mode at the moment. Will the price of oil drop at the pump? I think so. Maybe not October, but November, personally. Anyway, I'm really far behind, guys. I'm like 30 minutes. I'm going to skip over some of these in here. Yeah, Cosmos is going to do well, man. I'm looking at Cosmos. Am I Bitcoin miners? I don't do Bitcoin miners. Modbox, what's going on? Adrox, what's going on? Zocold, what's going on? Johnny Utah, what's going on? Junebug. Let's see. Rodolfo. Let's see what this says. At what price would you maybe consider buying puts on Palantir? I don't think I would buy puts. What's your average and what's others' average? Are you talking about Palantir? My average is $13 or so. Do you have a number of percentage? I mean, if it went to $45, I might actually consider starting to trim a bit. But for now, I'm just writing the covered calls and hopefully get that done. Let's see. Michael Anthony always hates everything that I ever say. All flight at Shanghai's 2 main airports are canceled on Sunday as authorities in the Chinese megacity prepared for a strong typhoon. Thank you for the update on Chinese weather. Dougie Dollars, what's going on, my guy? Should you invest in growth or divvies? Yes, I should do both. You think markets will sell off because of China news lately or China news today? I don't know. Was there a blue? If you start spouting off crazy, like I'm God's gift to man, like you always do, I will gladly block you from this channel as well. Fool's Gold. I know all eggs in one basket, but I've done nothing but stack Rocket Lab. I'm 135,000 shares. Congratulations. That's phenomenal. If you really believe it'll be 15 at the end of, why not just put everything into that? It's risk tolerance, man. In 10 years time, I'll probably be like, you know what? It's stupid that I didn't, but there's always the chance, small, you don't know what you don't know. Right. And so I'm not a rocket scientist, as you guys are well aware. And so it doesn't necessarily make sense for me to put all my money in one basket. Right. To me, I've come up with a number that makes sense to me, which is about 100,000. In having invested 100,000 in Rocket Lab, I would feel comfortable with. Would I be really upset if I lost 100 grand? If for some reason Rocket Lab actually went to zero and I lose all that money? Yeah, I'd be pretty upset, but I wouldn't be sleeping under a bridge, right? Versus if I put my whole portfolio in it, I'd have probably double the amount of shares that you're talking about. Like I'd have 260 some thousand shares, and I just don't feel comfortable losing that much money. Right. So there's a piece to be like, okay, this is large enough. This 100,000 that actually does 20x. It'll give you $2 million worth. I can write covered calls on that, make a little bit extra income. But at the same time, if it goes to zero, it's not going to kill me. If I lost where I've been working for the past 10 years, let's just be blunt, it's like close to $2 million. If I were to lose $2 million, I would be devastated. Right. So I just look at it, I try to be, and in 10 years time, I'll be like, I was stupid. I should have been more bullish, and I've recognized that. And that's why I've raised that number over time. Like, for example, Palantir, when I first invested, I was like, oh, $10,000. That was 2020. $10,000 is a lot of money. I'm willing to risk that. At the time, I think my biggest position might have been like $50,000. So, and that's like pre S&P 500 investments, right? Now my S&P 500 investment's like 300 grand. If you include the 401k, you include other things, then it's way north of $500,000. So it's like the S&P is my largest position. But in terms of individual positions, I was like, I'm willing to lose on a cost basis perspective $10,000. Then it was 20. Then it was 30. Now it's up to 100, right? So Palantir, I've invested whatever 4,500 times 13 is. Let's see, about 60 grand. I wish I got that up to 100, but I built that over time, over the past 4 years, literally on the 30th of this month. And then Rocket Lab, fortunately, it was a better cost basis over the past 6 months to a year. So I just added more, and I said I would be able to get to 100,000. And I view Rocket Lab as a better opportunity right now. So, do you think it's a better strategy or an okay strategy to write long-term calls on great companies like SoFi, Palantir at low strikes and low premiums 2 years out? I'm just getting an option. Seems very profitable. The problem with that is you don't know what's going to happen in the macroeconomic environment. So you would have probably said, man, it's a really good opportunity to buy Palantir back in 2021 when the markets were only going straight up. Right. And you were like, oh, it makes a lot of sense. Palantir is probably only going to do well as well, and then next thing you know, interest rates hit, 2022, everything pulls back, money becomes more and more scarce, liquidity dries up, these are starting to go through troubles, and what happens to Palantir? It drops massively. So that can be something that you use to lever and do really well and end up doing and making a crap ton of money. But you have to recognize that you have until at most January 2027 at this point. I think those are out now. So you could buy starting Monday, the January 2027s. And if everything goes well, you know, you might do well. But there's some people that say we're going to be on the edge of a recession, you know, and if we do end up in a recession, well, the value of those things will go down pretty rapidly. And so you'll end up leveraged in those opportunities, unfortunately, and end up in some shit. So let me see. Interesting. And do you plan to keep them for yourself long term or the 70% for rental? I plan on having a 70% portfolio wide loan to value ratio. So some of them might be 40% loan to value, meaning I've paid 60% of them off. Some of them might be 20%, right? Because we got the most recent rental because it didn't appraise for what we offered, so we had to eat about 1%. I think it might have been closer to 6%. We had to eat 6%. Sorry, not 6%, $6,000 to meet in the middle for the appraisal. So I think it appraised for like $15,000 or $10,000 less, whatever it was. We met them in the middle, so we had to eat $6,000. So technically, we didn't put down 20%. So technically, we're still paying PMI on that property we bought back in May, but it was close enough that they let it go through. So don't let them say you have to put down 20% because that's not true on a rental property. But the other property, the rental property, is at like a 27, 28% because it's increased value by about $90,000 since we bought it. So if you look at portfolio wide, specifically the rentals, not including my personal residence, then the rentals themselves, which is 2 of them, right? It's not like it's crazy. I'm sitting at a 77%. I'd like to get that to 70% because if I have 70% and we have good interest rates like we do, or we're starting to get, better than what we had, and I refinance, like I've talked about with the one house where we have a 27% refinancing, taking some of that money, not all of that equity, but some of it, and using that to buy more properties, right? But eventually I want to get close to a 70% because that allows you to not get called on any of the mortgages. That allows you to just be a little bit more comfortable. It's like leveraging your stock portfolio, right? Or your house. Like you don't want to lose your house. You don't want to lose your rentals. So, all right. I'm tired of this Azure guy. He is very confrontational. I don't like the way he speaks. So I'm going to take this great opportunity and mute him because he's very negative. Very, very negative. Sorry. Where are we at? Where is this Azure Blue guy? There he is. And where's he at? You can't mute? Hide user. There you go. And he's gone. He gone. So yeah, with 10 times you can buy one in a year. Exactly. I mean, the cash flow is going to be really good, right? And that's kind of where you get to, right? And who's to say I need to buy one in a year? If it allows me to pay down the mortgages on one preferred than the other, if I have excess cash flow, I can do that. If I need to reinvest in a certain property, like right now, we're looking at a potential 10,000. We're trying to upgrade the HVAC in one of the properties. We're trying to update and get some better bunk beds in one of the rooms to get us, we can sleep one on a twin with like a trundle. And I'm like, if we want to be a little more luxurious property, like, and charge top dollar, like I feel like we need to have more high-end beds, right? So we have a king in one room, we have a full in another. I'm like, we need to have a queen somewhere, right? I don't think we have space for another 1 or 2 kings, but we definitely have space for a queen. So I was like, let's reinvest back in the property. And you think about it, you buy a nice bunk bed nice bunk bed, you're gonna be able to charge $25, $50 more per night because you're able to sleep one or two more people. And if that's the case, then your return on that investment is fucking huge, right? So you already bought the property. So you buy $2,000, you get another $2,500 a year. Your return on your investment is going to be insane, and that goes right to your bottom line. You pay it off in the first year, and you're basically ready to rumble for the next couple of years. Is it worth it to buy call options? It really depends, man. Like, that'd be like, is it make sense to buy gas today versus tomorrow? It's a very general question. Sorry to be so blunt on that. I do not have Lucid Motors. Let's see. 2,500 MPW trying to add another 1,500. Good luck. Good luck. Crossroads, what's going on, my guy? Bullish for SoFi. SoFi said, hey, Maddie, we got opportunities for you to get some loans. And I was like, loans? What do we talk? They gave me at best 11%. So I was like, I'm good, SoFi. I'm good. 21-year-old college student invests $10 a day into index funds and using long-term options to give yourself time to build capital and buy into positions in a year or so. Shit. I want to say this. One thing that I'm speculating on, which I would say don't do this for your entire portfolio, because for me, I'm doing one contract, and I'm still like, I've thought about going up to 2 contracts, but one thing that I'm actually doing, which I've heard is pretty interesting, and it's worked well for me so far. I haven't shared it with the broader portfolio yet, broader team yet, meaning you guys. But I am up, and give or take, this is like approximate numbers, right? I'm up 340%, and that's before this most recent option. So technically I'm down on this most recent option. So take that with a grain of salt. Oh shit, did that really close? Or is that an estimate? That's an estimate. Okay. So this most recent option, I'm actually gonna have to roll. So this number might go down. I'm not sharing this, am I? Okay, good. So let me just double check where I'm at with that one. The market's actually returned pretty well, so I'm hoping this won't be too bad. Let me go back to symbol versus incentive value. So this call option actually is only down 33%. So this is about the right number, right? Because it's only down 33%. So I'm up about 300% on this strategy over the past year. Granted, it's a very small subset of the portfolio, right? So like very, very small. And what I'm trying to do is like test it out on a small side of the portfolio and expand it, depending on if it actually works out. So what I've done is, let me pull up this screen here. No, I do not want to share that. What I have been doing is doing something called the call roll. This is not something I invented, but it's just something that somebody else had told me about, and it's worked really well. So I've done this multiple times. Granted, I took a pause off of it for quite some time, but what this is, and I suggest only doing this with a small portion of your portfolio. So for those of you guys, this contract is going to be a lot of money. It's $900. So it's a lot of money. But what you're doing is you're buying, let's just say either at the money, slightly out of the money, or slightly in the money, the 562, let's say, because 562 is where we're at. So it doesn't make sense to buy the 563. So really just depends. So I'm going to do the 562. You buy it. And what does that do? The break even's 571. But there's 2 stipulations. You either sell it at a 50% return. So in this case, it's $9.84 times 1.5. You would sell this at $14.76. So $1,476 for this particular contract. Or if it were to get within 10 days of expiry, so in this particular case, it would be like October 8th or so, which would be kind of like mid second week of October. So if you're getting like the mid second week of October and it hasn't hit 50% returns, you would roll it and buy the same price. So let's just say it stays flat. You'd buy the 563. Or let's say you go to like 570. So it's just taking time and you just haven't gotten that 50% return off of that because theta decay and everything like that. You'd buy the 570 for the November contracts, right? You'd roll out another 30 days. So you'd be buying the November 15 contracts, right? And you kind of just play with that. The success that I've had, let me explain this a little bit because this is based off the SPY. The success that I've had, I'm going to read it out loud because I don't want to accidentally share something in the spreadsheet. Not that it actually matters, but actually I'm going to share it. Share this tab. Let me see. There's nothing. Yeah, there's nothing proprietary. Yeah, so I've only written this a few times, and granted, it's not very well organized, so apologies on that behalf. But these are the dates that I wrote the contract, and then the dates that I anticipated buying them back. So this last one is not finished yet, and it looks like I'm gonna have to roll it. So the 16-1, I don't think I'll get the 50% profit, but so what you're seeing is November last year, I bought to open SPY for a December 29th contract at 454. So I bought it at $6.70. So 670 was the buy price. I got a 50% profit on that within a few days, and closed it and made 50%. Then I bought another contract that same day, bought to open for January 12th, 2024, 635. 635, 50%, 953. So then with that, I stopped doing it for a while. At that point, I was up about 100% off the initial kind of 670. And keep in mind, like, this is why it's different, right? Because you're kind of basing it off of one contract. But then I started again in August of this year. So I took like 9 months off. I don't know why I did. I bought an 1190 contract and waited for that. And I think I got a little greedy. I sold it at 46. I was like 1750. Like, I just feel like 1750 was the number. Within a couple days, 2 days, it was up 50%. I bought another contract at about 1,000 that same day for 9/13, September 13th. And within the next day, it was up. It was a decent run in August. And it was up 50%. Same day, August 15th, I bought a contract for 1,100 basically. And then within 5 or 6 days, it was up 50% again. And then I bought the 559. And right now, this is at like 600 or $700. So I've lost 30% on this one. But you could see in total profit from this entire strategy. Oh, there it is. Total profit from this strategy to date is about $2,300. And so it's like trading 600 or $1,000. So it just goes to show you. And right now, this is the only time I've really been in a market where it's been scarce. So at one point, this contract, this $1,100 contract, the 559 that I have for 927, at one point it was only like 150 or $200. So I had lost like 80% of this. Luckily, the market's kind of returned to somewhat glory, and it's at like 560 something. So luckily we have that. So we go on a little bit of a run this week. You might actually get close to where we're at, but this is supposed to expire 9/27. So technically by Tuesday, because it needs 10 days left, I should be rolling this. So I might lose, 20, 30%, $200, $300, but say by Tuesday, I'll probably roll this, and I don't know. I'm like kind of cautious because I'm like FOMC. Like, do I want to play that? You know, am I going to just lose another $1,000? But my thought process was like, get yourself up to enough profit where eventually I could do 2 contracts, right? And then like have enough where, and the whole time I'll hopefully be like adding money to the SPY, right? Just the regular SPY, right? And just be adding the excess. So my hope is that like I never really go under, and I'll never just like continue to double up. Like I'm not going to use the Nightingale system where I double. Like I just feel like that's stupid. So right now I'm like sitting here being like, okay, maybe once I get to like 3 times contract value, I'll double the amount of contracts. I don't know yet. Contracts are expensive at the money. Like you're talking about $1,100. Like what was the one we were just talking about? The one we were just chatting about for these contracts was $900. Where are we at? That's November. We're looking at like October 18th. Yeah, October 18th. We're talking about $984. We're talking about 11 or $1,000 for a contract, you know? Like it's a lot of money, you know? And the break even's 570. So it's like that's all-time highs. Like, is that really the right thing? But granted, the other ones were all-time highs. So you're kind of sitting there. And so anyway, that's called the call roll strategy. I don't know. We'll see if that works. All right, so let's go back a little bit. I'm losing people. I don't know if it's because I'm dumb. Are you not enjoying this? I don't know. Positive vibe, or is this because it's late? You know, looking for a queen. There's an Amit Grinder joke in there somewhere. There it is. 11% is bad. 11% on what? I don't know what you mean by 11%. 11%. It might have been. Oh, you meant for SoFi. Got it. Yeah. Yeah, I was just like, I'm not doing that. That's stupid. Round hole weekly ETFs, no. Personal loans are bad. XDTE. As a shareholder, I hope they go at 15% loans to Matt. Thank you. What does it say? BTC. Buy to close. Buy to close. Probably. You're right. It should be sell to close. Sorry about that. I'm so used to selling. I don't normally buy options, as you can tell. Facebook Marketplace. Not sure what you're talking about. Did we double down on Next in the Cash Flow Chronicles portfolio? No, but Chris and I talked about it today. We will start dollar cost averaging in. Guy on Twitch. I never saw your question, my guy. And be sure to ask it because I didn't see it. I see a lot of YouTube questions. I'm live on YouTube, but I'm also trying to grow the Twitch volume as well. So, what are your buy prices looking at Rocket Lab if it pulls back? I'd probably buy anything below $6, but it really just depends on how big of a portfolio you have. Like if you have 0 shares and you're looking for something 10 years down the road, I think even right here it's cheap. Yeah, you might be down. It might retrace back to high 4s or something like that. But you know, if you're going to dollar cost average into it and continue to buy, then that's a solid strategy. It seems to increase chance of profit pretty well. Not sure if you're talking about the buy roll, but the buy roll is really just playing the inflow of money into the S&P. So generally speaking, if you think about it, 75% of the time, and it might be 60, it might be 80, like the S&P is going up, right? So if you look at it, yes, there's retracements in there. And so that's why it's like you kind of have to be cautious. I was like, you don't want to just always double because you'll have a really good streak. Like from February 2003 to 2007, you had a really good run rate, right? But then in 2008, 2009, you just got completely clobbered, right? So it's one of those things where it's like, if you see the market start to turn, okay, yes, I'll lose one contract, but then I'll maybe wait if it like really is like, oh, it just kind of like flatlined for a little bit, um, or wait till it starts to reaccelerate. Um, so I think the thing that scared me was kind of like September 2023, or like it was like October 2023 when things were starting to look really good. I don't know. I just like, it was just like, you know what? The markets are running pretty hot. Like, let me wait. But really, what I should do is wait for me to lose like one of the contracts, wait until it's potentially, you know, a better time period. Like right now, what I might do is I might just let this contract roll out and maybe just take the profit by Tuesday and wait until the Wednesday to get a little bit of better feeling. And if it feels like the markets are going to continue to go on a run, the optimism's there and stuff like, maybe I'll continue to the strategy. Or if it feels like markets are going to dump, which I don't know, generally speaking, when rates get cut, things go well. So we'll see with that. But anyway, just some food for thought. It's a little bit different of a strategy. My last question, I like your insight. What made you so bullish on Rocket Lab is the financials. The financials for Rocket Lab are garbage. It's really around the total addressable capability of the organization and the growing of revenue. My hope is that, you know, they're able to reduce the cash burn and eventually become out profitable. They're the second most launched vehicle in the United States behind SpaceX, way ahead of any of the other competitors that are in the market. They have a decent run rate of cash between now and when it would burn out. They're coming out with a medium launch vehicle that'll compete with Falcon 9. I have a whole laundry list, an hour-long video. If you're actually curious about Rocket Lab, I have an hour-long video on my pinned tweet for Rocket Lab. Or for those of you watching on YouTube, it's one of my most recent videos. It says, I think it's like Rocket Lab Breakdown, and it's an hour long. It's about 59 minutes, and it goes through literally every revenue segment at the moment. It's really only broken up into 2 segments, but with that, I talk about a lot of different things. There's like 5 or 6 key lines in trajectories in the company right now that are continuing to grow at really good pace, and it talks a lot about, you know, how the company's evolved over the past 3 years since they've gone de-SPAC. Basically, they were brought public by a SPAC, and so since then they came out with $700 million. They did a bunch of bolt-on acquisitions, and it kind of transpires after they've already done 20 or so launches. And so it's really that, talking about what's happened and transpired since 2021 to now. You know, the 30 odd launches that they've done to date since then, coupled with all the different space systems, etc., and where it continues to potentially go, and what I'm looking out for going forward over the next 12 to 24 months. But it could always go to zero, right? Like, and then somebody asked, like, why don't I just full port Rocket Lab? It's like, in 10 years time, I'm going to feel like, yeah, I should have full ported, right? But if I lost $2 million investing in Rocket Lab, I'd be fucking dead inside. But, you know, it could potentially double in 10 years time, where I am today, Rocket Lab could double my net worth, my current net worth, double it. Or I could lose 100 grand. And if I lose 100 grand, you know, I'm not going to be that upset, but doubling my net worth would be great. It would be nice if I had enough balls to invest wholly into Rocket Lab, and potentially, what would that do? 20x, like my entire net worth. But, you know, and that would be really dope. That would be the play of all plays. But I don't know. I can live with potentially losing 100 grand. I could potentially look down and be like, I didn't want to lose, you know, $1.5 million, $2 million back then. I don't know what I would have done. And that could be the end of that story. Like, I could quantify losing $100,000 and being like, well, but I can't quantify being like, well, I got to start from zero again, guys. So So that's that. About an hour and 30. For the 80 of you that are still on here, much appreciated, man. Really appreciate you. I'll answer any additional questions that could have come through the chat, but I'm going to be wrapping it up here. Much appreciated. I didn't really expect to go for about 2 hours, but it will probably end up at about 2 hours if people have a few more questions to ask. But I please ask you, 80 of you, if you're not subscribed already, please do so. It's completely free. Contemplate becoming a member if you just want to support me and the channel. You know, the thing that I love most is hopefully I can become a full-time or part-time YouTuber. Right now, this is kind of just something that I do on the side. And I'm having a lot more fun with it in the past few weeks than I have over the past few years. That's for damn sure. But let me just buy another $1.54 of this. I know I'm already going to buy some tomorrow, but let's buy some more. Really gets you almost a third of a share. Yeah. So tomorrow I have another buy. I buy about $50 every 2 weeks. So I don't have a lot. I do not have a lot. I wish I had more. I also have some in my personal brokerage account. I guess this is technically a personal brokerage account too, but this is something I'm just dollar cost averaging. It's 300 shares. I also have, I'm not sharing this screen, right? Yeah. 1,000 shares. So I guess total I have about like 1,400 shares, 1,300 shares. I wish I had more, but I should dollar cost average into this. I should put like $100 a week or something. Maybe I do put in about 1,000. I don't know. It's a good point. That's one of those things where it's like, it would be dope, you know, because I feel like the cash flow from that going into the future would just be crazy, crazy, crazy. You'll be back. Good luck, my friend. Nice to meet you. Danielle, what's going on? Is it Daniel? Danielle, I assume. Ray, you're the man. Junebug, you're awesome. Cosmic Breadcrumbs, you're the man, dude. I haven't seen you before, so getting better and better. Damn, much appreciated. 4 in the UK, can you go to bed? My guy, you can go to bed. Peyton House, what's going on, man? Staying up late. It's about 10:30 my time, so but like I said, much appreciated, you guys. The one of you that stuck around the entire Twitch, the 805 of you that clicked on in Twitter, that's awesome. The 80 of you that stuck around on YouTube, be sure to hit the subscribe button, hit the bell notification as well. That would really help out. Would love to see you guys come back more and more. And the thing that's nice about this is like I left a group chat earlier today, and they were like people messaging me. They're like, "Oh my God, like I can't believe," and it's not any of you guys, but actually maybe it was a Rocket Lab group chat, and they're like, "Oh, we hope we didn't like," and it's like, I'm not really here for the not really here for the community aspect of things. And I love the community piece, right? But I'm here for facts. Like I'm here for helping you guys make money. I'm here for that piece. That kind of comes number one for me. The community aspect and you know, having that like touchy feely stuff is kind of number two. And I know that that's kind of reverse. Like I know some other people, they are really about the touchy feely community, like big hype. Let me like tout the fact that we're all up on Palantir and really get you guys going. It's like, that's great. Like I could lie to you through my teeth and be like, Palantir is still cheap and it's going to go up to like $45 tomorrow and, you know, all that. But that's just not who I am, right? Like at the end of the day, I like to look myself in the mirror and be honest with myself, because that's who I'm really fighting. I'm fighting the guy across from the mirror. I'm not fighting, you know, anybody in the markets. I'm not fighting, you know, Chris Patel. I'm not fighting Darth Dividend, like all these people. I'm looking across the mirror and fighting myself and understanding and trying to get rid of those preconceived notions about X, Y, and Z, and trying to get rid of, am I really that fearful about X, Y, or Z? I'm fighting to make myself better. I'm fighting to make my portfolio better. I'm fighting to become a better YouTuber. I'm fighting to become a better petroleum engineer. That's what I'm fighting for. I'm not fighting somebody else. Like I shouldn't be fighting somebody else because they're fighting their own battle of trying to be a better X, Y, or Z. Now, if that makes me a better investor, you know, working with that person, then maybe that's a different story. But there's so many people that put so much emphasis on like the community aspect of things. And the community is great. Like, don't get me wrong. Like I love the Palantir community. I love the Rocket Lab community, but I'm not here to like try to make you feel good, right? I'm here because we're trying to add value to the markets. And if you want to feel good, like I'm all for ESG to an extent, but I think that sometimes you overdo it. And at the end of the day, like, yes, you feel good and you operate better as an employee. I get that. But when it comes to the stock market and business, a lot of times there's no hard feelings and people are still expecting like flowers and rainbows. And to be honest, man, like there is no flowers and rainbows in the stock market. And so when it comes to communities, like I'm all about it. Like I love seeing you guys return. I answer your questions. I have no quarrels about that. But like when it comes like you didn't treat this person with like the kindness that it's like I don't give a fuck. I really don't. Like if the person's wrong and I think that they're wrong, I'm gonna go face to face with them and tell them straight to their face they're wrong. And maybe that gets me in trouble. I get that. And I hear that and I get myself into trouble sometimes, but what am I going to do? Like sit Johnny aside and be like, hey, Johnny, I really don't approve of what you wrote. I really think that you should take the opportunity. And I feel that maybe you're being too optimistic about X, Y, and Z, and you're really not taking into account the risks that might. I'm like, fuck no, Johnny, you're being way too optimistic. Not every stock goes all the way up. There's unrealized risks that you're not even including in your analysis. Do better. And they're going to be like, Matt's harsh. Like, I don't like the way that Matt talks to me. It's like, motherfucker, I'm wanting you to make money. Like, sorry that I don't blow smoke up your ass. And so leaving a Rocket Lab group where they were just like, I think we should all just be friends and talk and be friendly with one another. It's like, didn't we fight world wars for freedom of speech? Like, I don't understand what you're saying to me. Like when it comes to that, it's like, I get it. I could be less harsh, but I'm not going to sit there and be like, it's okay that he's wrong and he's spouting misinformation because he's part of the community. And it's like, no, like I don't operate that way. I do not. I refuse to do that. I couldn't look myself across the mirror every morning and be like, I'm okay with Johnny because he's spreading misinformation and I'm not going to call him out for it because it might hurt his feelings. Like, I don't deal with that shit. I deal with the fact that I'm trying to make you guys money. I could be wrong. I've been wrong many a times and I'll be wrong again on this channel. And I own up to my mistakes. Like I was wrong on hymns. I was wrong on Wish. I'll be honest when I'm wrong. I'll be more than happy to do so, but I'm not going to sit around and try to sugarcoat somebody's feelings because at the end of the day, it could lose somebody fucking money, and that matters more to me than admiring somebody's feelings. Tried to make them feel good inside. When it comes to hanging out, being one-on-one, I'm more than happy when it comes to reaching milestones, like people hitting $1 million milestone or Fool's Gold having 135,000 shares. Like these are the cool things that I love to hear about, and I'll congratulate the fuck out of you. But what I'm not going to do is try to admire your feelings or like make sure you feel good about spouting misinformation. Like you got me fucked up if you think that that's what I'm going to do. So hopefully you guys enjoyed the end of the stream as much as you did at the beginning of the stream. And hopefully, the only rainbows that we're doing here is the Bitcoin rainbow chart. You know what I mean? But yeah, I'm tired of having all these babies being like, you're too harsh to people and you should treat them with more respect. It's like, because I told them they're wrong, I'm being disrespectful, right? Like there's a time and place, you came in late. What are your thoughts on uranium stocks? Man, I think nuclear is going to do well. I don't know. There's so much regulatory associated with it, that one's tough. Before you go, how about thoughts on Black Sky with its recent movements? I don't know, man. I've heard a lot of rumblings about their management and them being shady, and I feel like it's one to watch, but to me, I still feel like with right now, it's a falling knife. And until it kind of plateaus and gets to a place where it makes more sense, it's just kind of tough to potentially buy. Like there's no reason why it should still be dropping like a rock. It's EBITDA positive. It has been for the last 1 or 2 quarters. So I'm just sitting here like, it's not like it's a huge market cap. It's not like it's starting at $2 billion. It's already $100 million market cap. They've already done a reverse split. Where's the bleeding going to end? That's the thing that scares me. So I'm okay waiting for it to reverse. I feel like it just hasn't met its expectations. It has not met its expectations. So I'm okay waiting on that one. But if it wasn't with the community, I wouldn't know you, Matt. Well, but you probably wouldn't follow me if I talked a bunch of bullshit and like flowers and rainbows, right? You follow me because of Palantir, and you follow me because I've used Palantir. You follow me because I have experience with Palantir. If I was just sitting there being bright-eyed, bushy-tailed, trying to blow smoke up somebody's ass about Palantir and trying to chase it for views, and stuff like that. I'm not saying, don't say the fact that I said chase for views with Amit in the same sentence. Do not put words in my mouth. Amit does a phenomenal job on the market open, market close. That's why 40,000 people follow Amit and more than 70,000 follow him on X. He talks about more than Palantir. So, but he is the leader of the community. So hopefully people don't get that confused. But, I bring a different lens to the Palantir community, the truth lens. And I call people out all the time where they're just like spouting off misinformation. I'm like, what kind of speculative bullshit is this? And like try to talk about it like it's fact. Like I don't deal with that shit. I can't lie. The finance junkies are the easiest and most realistic to listen to. No offense, but if you think that finance junkies is the most realistic to have listened to, then I think you need an evaluation in your head. No offense. And I'm okay if I lose a subscriber over saying that. Same for all my friends in chat. And sorry, I shouldn't say all 4 because there was 1 or 2 of them that I never really saw eye to eye with. Same for all my friends in chat. We follow each other and become a finance family, our community. Okay. But if somebody starts touting misinformation, like I'm going to call them out. So much bad news about China could hurt the market. I agree. China's definitely weakening. Yeah, like I'm not here for the community. I'm here to help myself and make you guys money. Like that's the whole reason why I started making YouTube videos, was documenting my own progress. And then, eventually it came out that people actually cared about what I was posting. So, I bought 1 or 2 shares of Celsius. I've been trying to convince Chris to buy more. I think it's a great opportunity. I have puts that I've sold on Celsius to potentially buy below 50. I think I have a 35 put as well, 1 or 2. So thanks for the stream. Looking forward to the next. Thank you, ETF FaceTime Home, my guy. Much appreciated. Smiles from Junebug. Henry Lee, what's going on? Next lawsuit, did phase 1 got delayed? No, I think that they're going to continue construction. We'll see. Chris and I are going to touch on it tomorrow. Is Kura Sushi popular in Texas? I've seen a few, but I've heard also, I could be wrong, so please do research. One of them might have shut down temporarily due to, it might have been refurbishment or construction, so keep that in mind. But I know one of them shut down at one point that I used to go to. Do you think Nvidia and semi stocks will go down to the August 5th lows again? I'm sure there will be some point where the semis will take a break and go down, but I can't tell you if that's going to be next week or if that's going to be 6 months from now. Could always be trouble. I'm out of oil stocks right now, except for any share-based compensation that I receive over the next 12 months. The thing I believe is going on with oil, and I could be wrong on this one, but high oil prices bring low oil prices. 2022, we saw high oil prices. We have yet to really see a time lately where there's any positives going on, meaning like a drop or a lessening of supply. We've only seen more and more supply come on the cycle. I think that right now you're looking for low $50 oil prices in the near term, 6 to 12 months from now. Like Michael Anthony's saying, China's weakening. We have $5 million of oversupply compared to the demand. The demand is still strong, right? Like demand is still over 100 million barrels a day, but it's just we have way too much supply, way too much investment. You have countries continue to focus on green. You have countries focusing on, um, increased interest rates. So I just think right now you have a lot of things slowing down. So you have a worsening of demand. Plus, you're coming off of summer, going into October at this point. So, with that being said, it's hard. You use less in the United States in October than you do in midsummer, right? So, demand is cyclically weak in these sorts of months going into winter. So it's just not looking good. Unless you have a geopolitical situation to help increase oil demand or disrupt the oil supply chains like you had in Russia in 2022. There's no positives right now for oil. So in futures look more abysmal than normal. It's been a minute, like it's been a couple days since I looked at it, but I checked in like December oil price futures were at $66. So it's even worse than it is right now, which is last I checked, it was at like 68. So where are we at? Yeah, we're at almost $69. I just don't see anything right now. And then Pakistan just announced a huge discovery offshore in territorial waters. So what is that going to do, right? I don't think anybody's rushing to it because obviously you have to come up with a decent production sharing agreement if you're going to get international companies to be involved. But supply is just way too high right now, and demand is waning. China's decreasing, so the people that we've always been looking to increase demand is China. That's going down. So you have OPEC choking back, but you still have the United States, Guyana, and a few other countries continuing to ramp up oil production. So it's like they've choked back their oil production, but the rest of the world has continued to invest because they're not controlled by OPEC. So it makes it a little tough. I think that you need to see let's look at oil prices recently. You need to see a bottoming of oil prices. Sorry, this is small, but I think you need to set a bottoming of oil prices. Why is this weird? Come on, Maine. There we go. You need to see a bottoming before you get super bullish. And for now, you've just seen since July continuing to go down. So and these are geopolitical things that have happened that spike it up, right? So unless you see some sort of geopolitical thing that really turns it in the opposite direction, I don't see it. I don't see it. This is cyclically a low part of the season. So generally like December timeframe, it's always a little bit lower. And once you get over the hump through winter, there's a lot more demand and a lot of things happening. So it's generally cyclical. So it could just be, that cyclical nature playing in. But I wouldn't be surprised, man. Like I just don't see a good reason why oil prices should expand from here right now. Yep, I use Palantir every day at work. FJ, what's two cryptocurrency? I've been talking way too much about it. No offense, but not your cup of tea in terms of investment. Do an amazing job. Thank you. Thank you. I like hearing many investments and learning a little from everyone. Unfortunately, June, if you haven't figured out, there's a lot of people out there that are full of shit. So I noticed M and Gap moving up in the last 3 quarters. That earnings was good. I don't know what company you're referring to. Thoughts on Oxy? I think Oxy is a really well-run company from a business perspective. Like I said, I don't hate it. I just think I would wait until you have a flattening of the oil prices before I would really get after it. If I were to start investing in one again, I get company shares, but generally speaking, I sell those for Shell. I would probably look at Total. Total's a really good company. They're really well run. Another reason why I'd potentially look at Total is they probably have the best renewables portfolio out of anybody, aside from like NextEra Energy and a few others. So Total is really getting after it from a renewables perspective, and I really like that. I think that they're diversifying really well into that. So if I were to start loading up, in fact, let me look at it because it's been a minute. I don't think I've looked at Total in a while, and it's one that I always forget. It's TTE, not TOT anymore. I forgot they rebranded. These guys are probably held up probably the best out of any of the oil stocks. Probably because they're already so dang cheap. Sorry, no, I'm not sharing. But they're currently trading at like 7.5 PE. Dividend yield's 4%. $162 billion market cap. Like they're looking pretty dang good. Versus Shell was the one that I was investing in. And over the past 3 months, they've taken a bit of a little bit of a tumble. So it's from $74 down to 67. So I sold at $72.50. I sold around this time, about a month or so ago. Maybe a little bit earlier than that, but it was like $72.50. I got all the way to 65. And this could be the bottom, you know, like you could have very well seen the bottom. I don't see a strengthening position in oil right now. And I could be wrong, you know, I'm not a fortune teller, but blessings. What's going on, my guy? Was it you that was supposed to ask a question? You never did on Twitch. You get what you're saying. Some people don't give good advice as far as stocks and shouldn't be giving investment. Others, you have a lot of experience and do research. Yeah, I mean, some people, how do I say this? Some people just come on here because they like to talk, right? And they like entertainment and they like to, and so, unfortunately, they're doing it because maybe they don't have another thing to do, you know, like maybe, and once again, people are always going to assume I'm talking about Amit. I'm not talking about Amit, but some people, because Amit's a different beast, right? Like he's actually trying to make a media channel out of this. Some people will just like come on and do this because they just like the lifestyle and they want to like be a full-time YouTuber, and they found that the best payment when it comes to YouTube and streaming numbers is maybe not the best streaming numbers, but in terms of payment per RPM, revenue per 1,000 views, is finance. And they're like, ooh, like if I become a finance YouTuber, I'm going to make more money than if I'm just like a normal guy that makes $2 per RPM. Like it doesn't make sense to do something else. So yeah, you just have like 10 years ago, you were hearing from me on YouTube, right? Like I didn't know shit. I still don't know shit, but I know a lot more than I did back then. So Palantir is pretty expensive after that recent run up in terms of PE. For someone looking to add to their position, what do you think about adding at the current price? It depends, man. Like where you think that in the next 10 years Palantir is going, how big your portfolio size is, what current concentration in your portfolio, all things that I don't know at all enough about to give you that advice. I mean, if you're looking for the next 10 to 15 years, I think Palantir is undervalued compared to where it will be, but will it continue to like go straight up in price from where it is today? I think that's not the case. I think you're gonna what I'm predicting or thinking, and this is all speculation, so take this with a grain of salt. I think a lot of people think that 30 to 35% growth is in, and that's what's going to happen in 3Q, 4Q going forward. If you have a number that's less than 30% revenue growth in the third quarter, then I think you're going to have a lot of people very upset with Palantir. And they're going to be like, oh my God, like all this stuff for nothing. And so we'll see what ends up happening. You know, I'm very bullish on the company long term. But I think it's overvalued here. And I think that there's going to be a pullback. I think there's been a lot of great news. Q2 was good news. The S&P 500 was good news. You had a lot of other things coming out like Warp Speed, good news. Some new contracts, good news. So you have a lot of things building on top of each other. Hasn't had a breather in quite some time. Like, let's look at Palantir. I mean, the whole year has been phenomenal, right? So don't get me wrong when it comes to that. But since earnings, you haven't really had a breather, right? So you went from $28 down to $24. Earnings comes out, it skyrockets to 32. It slowly comes down, and I think it was going to come back down to like the 27, 28 range. Boom, S&P 500 news. You go from 30 to 34, and now you have people buying in because they think it's going to explode in terms of S&P 500 news. So whether it does or not, you know, I guess we'll see. But I think you'll have a lot of insiders selling out right now because they're, to me, I just think it's years ahead of growth. Like I said, if you're looking 10 years down the road, I think it's a great opportunity. If you're looking right now in terms of where we're at, I think you're trading on 2028 numbers, and that's just too long down the road. So, you know, I think that there's something to be said about that. And whether or not that means you're okay buying it, knowing that, you know, you're a couple of years ahead in terms of value where it should be today, that's fine. I mean, I don't think that's upsetting. I think it's still going to be one of the best companies in the next 20 years. I think this is going to be one of the most transformational companies that we have in the S&P 500. So to me, if you don't have enough and you feel like you need to grow allocation, I'm okay with that. But I would just say don't burn all your money today. I would slowly cost average. And I could be wrong on that. You know, it could go to $38, $40 by the time this is all said and done before it retraces. Could very well be the case. But I'm a firm believer that it's a little overvalued, and generally speaking, markets are rational at some point. They can be irrational for a long time, but I think it needs a bit of a breather. At the end of the day, we're all adults and always clicking the buy button except ourselves. Exactly, man. A lot of people are like, Matt, thank you so much. And I'm like, you're the one that hit the buy button, my guy. Like, I had somebody thank me the other day for Rocket Lab, and I'm like, dude, you're the one that eventually bought it. You felt good enough about it, and you were like, let's go, let's do it. So, all right, everybody, no more questions coming through. Hopefully I didn't upset too much of you. 8 of you in here still. Please hit the subscribe button. Feel free to join the membership as well. It would mean a lot to help. Every dollar helps, counts, goes back right into the portfolio or into the real estate side of things as well. So you guys rock. Unsubscribed, thank you so much. Hopefully you guys have a great week. I will be checking in. Cashflow Chronicles tomorrow. So if you guys haven't followed Cashflow Chronicles, please do so. It is our streaming channel that I have co-owned with Chris Patel. We talk about a lot of different things. We talk about the things that he talks about on his Patreon. Right now, he's on a big hype about preferred equity. Tomorrow, we're going to be talking about NAXT because they did have some news come out. So I didn't talk about it much on this stream. I'm going to do some DD tomorrow. I also have, for those of you that aren't really familiar with NEXT, I do have an article on Seeking Alpha about NEXT, and let me get that in here before I head out. So any of you guys that are interested in knowing a little bit about NEXT before tomorrow's conversation, here it is in the chat. And we will chit chat next time. Please hit the subscribe button. Share with a friend or a family member, please, as well. We're trying to get to 15,000 subs in the shorter term. That would be kind of my new goal. I'm actually going to start to put goals for myself back on for doing YouTube videos. So we're at, let me see, I should start like shouting this out actually before I go. Let me show this. It was actually kind of cool. Analytics. So see subscriber live count. Yes. I don't know why this is so small, but let's take a look at this. Live count. So we're at 552, 13,552. That's pretty cool. But literally less than 2 weeks ago, almost like less than 2 days, 10 days ago, we were at 13,337. You can see it like flatlined, 1 or 2 a day, depending on how many videos I put out. But literally like less than 10 days ago, it was that. And then 90 days ago, you can see we just hit 13,000 like in July. And here we are. It was only 1380 in the beginning of August. So the last 2 months, we've seen over almost 500 subscribers. So it's all because of you guys, all because of you guys getting me rejuvenated. And like literally within the last 10 days, it's been 200 plus subscribers. So 220 almost subscribers, and a lot of that's just due to the increased cadence on the channel, and you guys really giving me a lot of love and support, and it really means a lot to me. And yeah, it's reflecting in the revenue as well. Like I normally get like $100, but now I'm averaging, like, depending on if I do a live stream that day or not, it's like $10 to $20 a day. So that's kind of cool. If I could get back up to like $200 a month, that's pretty cool. Because I haven't been at $200 a month. Like, when's the last time I had like $200 a month? August at $170. July at 95. Let's talk about what was June. Oh man, it like doesn't allow me to. Anyway, it gave me like quick looks at August and July, but I have to like input manually to get to June. So sorry, we're stopping there. But hopefully you guys enjoy, and let me know what other things you want me to cover. If there's anything that I'm not really looking at, I'll be honest with you. Sometimes I don't necessarily get the most love and want to look at certain companies. Sorry, somebody else has subscribed, so thank you. Much appreciated. We're at 13,553 now. So yeah, sometimes there's a want and desire to continue to look at other stocks, and sometimes it's like meh. It just doesn't make any sense to do that. So depending on what company it is, depending on what I think, there's a lot of companies out there, unfortunately, and so you can't always keep everything, every single company in your mind, and sometimes things just get lost. So that's part of the reason why I don't like to sell a lot of stocks, especially if they're not done. Like Palantir, people are like, why don't you sell Palantir? It's like, if I take my mind off of it, sometimes it just comes out of the circle and of like rotation of stocks that I look at. So it just doesn't make sense for me to do so, because then I'll forget about it. Like Union Pacific is a really good example. I sold out of Union Pacific because it like went to a 25x price to earnings. And I was like, I'll buy it when it gets back down to 20. Because you think about it, 20 to 25, that's a 25% return. When you look at price to earnings ratio, if earnings kind of stays flat or slightly goes up, right? So you're thinking, oh, it goes from 20 to 25x. And, stocks, they generally go up and down like this. So swing trading, etc. If you're kind of looking at the price to earnings and a company's more mature, you can make those kind of calculations. Oh, the company generally trades between 22 to 25x. And if it drops down to 20, you buy it at 20, wait till it gets back to 25, you sell it, And then sometimes you just forget about it. And next thing you know, earnings grows and you lose out on 100%. So sometimes it just doesn't make sense to play those games about coming in and out of a stock unless you really are concentrating, you're really journaling, you're doing it full time, you're really concentrating on particular companies. stuff of the like. So anyway, we re-accelerated from 70 to 86 people. Much appreciated, all of you guys. Cruise lines, maybe. We'll see. Just subscribe. Thank you so much. Matt's the man. Much appreciated for the accolades. Thank you for subscribing. That's what's more important, and continuing to support the channel. Cruise lines will probably get Chris fired up about cruise lines when it comes to Cash Flow Chronicles tomorrow. So excellent. Much appreciated. I'm calling it there. I'm probably going to get prepared for the work week. And like I said, I will be in the UK starting Saturday next week. So I can't necessarily guarantee that I'll be able to stream the week of like the 21st to the 27th. But I'll try my best, but it'll probably be at weird hours. So maybe it'll be actually be advantageous for me to stream a couple nights with Amit, because he'll be kind of like a couple hours behind, 6 hours, 5 hours behind me. So it might be advantageous. Maybe I'll talk to him about it to see if I can help next week to get some more love. So much appreciated for the 13,553 of you that are subscribed. We will talk to you guys soon. Have a good night. Cheers. Meow.